Hi there, Alan Shields here, Director and Co-founder of RFI Global. Hope you're doing well. I'm going to talk about Buy Now, Pay Later. It's something that's on a lot of people's minds and is very popular amongst consumers as well as people within the industry. Now, in Australia, in the last couple of weeks, we've had a bit of movement on the regulation front, and the Financial Services Minister here announced that it was going to be regulated. And what that's going to mean essentially is that buy now, pay later providers have to take into account more data when they're assessing customers, and they need to essentially show that their products are going to be suitable for customers under responsible lending obligations. Now, the response in the online and the industry has been quite interesting. Some people are almost celebrating what they see as the inevitable death of the challenger buy now, pay later brands. And that sort of leaves the spoils for larger incumbents like Apple and PayPal and some of the banks. Whatever your perspective, though, I think there are a few things that are worth considering. One of those is that, buy now, pay later might not be for everybody, but it does give customers something that they want. When it emerged, it gave consumers this new ability at point of sale to choose to pay for things in 4 tranches. That hadn't existed as a mainstream option before. And what we hear from customers when we do our surveys is that consistently they love the fact that we can give them that budgeting ability. And, of course, we're in 2023, cost of living is going up, everything is getting more expensive. So, that's really important. And I think that's led to the success of it. Effectively, we've got this situation now in Australia where about 55% of all Australian adults have used buy now, pay later. Now, that product didn't exist 6 or 7 years ago, and that's pretty phenomenal. So I think that's really important. And I think when I think about the industry, there are a couple of things that I'm left with. 3 takeaways, I guess. One is that, if I put it simply, there are products today that exist in the market that just wouldn't have existed were it not for the threat to traditional banking that buy now, pay later presented. So that kind of forced incumbents to innovate, and I don't think that's a bad thing. The second thing is that outside of banking, buy now, pay later has fundamentally changed the retail landscape. Now, every time that a consumer goes to check out online or in a physical store, there is a very good opportunity that they will be provided with several different buy now, pay later options, and that will endure regardless of what brands are underlying them. And then the third thing is that from a consumer perspective, consumers have more choice. They've got the choice to use buy now, pay later or to not use buy now, pay later. They have an alternative to borrowing with a personal loan or a credit card. They've got the option to check out with or without traditional mechanisms when they're in store or online. And I don't think the consumer choice is a bad thing either.